Let's get more on the equities trade with less than 1 hour to go until the closing bell. Jim Paulsen, Chief Investment Strategist at Wells Capital Management. He joins us from Minneapolis. So, Jim, just checking my count here. Looks like the S&P up 5 days in a row. Mind you, not tremendous volume, not necessarily tremendous move, but nonetheless higher. Significant in your view, or we got to really wait till tomorrow's jobs report?
Probably not. I think trading this week's been all predicated upon the report tomorrow. And there's so much uncertainty around it, Carol, with the weather distortion possibility that it's really hard for traders wanting to put a trade on ahead of that tomorrow. So I think a lot of the low volume is reflective of that.
And you think it's going to be a difficult report to go through as well? I mean, is it just the weather that makes it problematic here, Jim? Or, you know, there's a number of factors. We have still census jobs to come in a couple of months. We're going to be talking about that later. But does the weather make it really difficult this time?
I think it's mainly the weather, Matt. I really think that we're creating jobs, or we're very close to it. I mean, if we look around, you know, you see the consumer that's spending more money. The retail reports are better. That tells you something about the job market. Must be a little bit better. You see CEO confidence has risen dramatically. You see them engaging in dividend hikes. You see them engaging in M&A activity, both of which they must be doing because they're feeling better as well. If that's happening, then you've got to believe jobs are right around the corner. So I don't think it's a question of, you know, are jobs going to show up? I think it's a question of, is tomorrow's number going to be misinterpreted by the markets perhaps if it's really bad, or if it turns out better than expected even with weather, is that going to create a real positive environment tomorrow? Just a lot of risk going into tomorrow as a trader, I would suggest.
But Jim, we haven't seen fantastic data points leading up. I mean, you point out the ADP report was not good. The claims were okay, but not fantastic. And last week they were almost back to 500,000 again. I mean, why does it look like this situation is deteriorating?
Well, I guess what I'm saying is I think a lot of those reports are weather related too. The ADP report,
gotcha.
the claim numbers in recent weeks, you know, a lot of that not only weather related, but president's holidays and other holidays. I think when I look a little more broadly, I'm just saying I see profits, corporate confidence picking up, and retail spending, all of which tells me that the job creation is there. I think it's going to be there. Whether it shows up tomorrow's report, I don't know, Matt, but I think we're on the cusp of creating jobs.
I mean, it is interesting, Jim. You talk about CEOs being confident. I talked to Massar of Coca-Cola today, and he said we could see, you know, possibly another dip. I mean, they're still cautious. I mean, there are still concerns in the corporate community, and that's going to keep them holding back potentially on hiring until they know for certain that we're well indeed into this recovery.
Well, I think there certainly is a CEO here or there that is worried, and I think different ones are worried about different things. But I see a lot of evidence that confidence come up. The CEO and CFO surveys have come up a long ways already, but more in just their behaviors. We've had 4 quarters now of outperforming profits, Carol. You're seeing the behaviors of M&A activity, dividend hikes. You're seeing capital spending go up again, both overall as well as non-defense capital good orders was a positive contributor in the 4th quarter, and there's evidence that it went up pretty healthy with factory orders this morning, again in January. So I do think that businesses are starting to feel a little better, and I think that we're very close to producing jobs. And if we start to do that, then I think generalized consumer confidence comes up and people stop talking about double dip. If tomorrow we get a bad job number, then I do think you're going to have a concern about double dip. But I think the reality is we're not that close to a double dip. I think this is a sustainable recovery. And if it takes a few more months to get through the weather distortions to figure that out, then that might be the case. But I think there's ample evidence to suggest that we're well into recovery, and double dip's not that likely.
Hey, and Jim, you think that we're still early in the economic recovery and still early in the stock market recovery. We are up 65% from the low, which is almost exactly a year ago now. How much further do you think we have to go in the stock market? I mean, have we put in the big gains already early in the recovery, as we typically do?
We certainly are not going to go up as fast as we did last year, Matt. And we're going to have corrections along the way. I think that's true. The easy money's been made. But look, you got to really be impressed with one major thing of this cycle so far, if for nothing else, and that is the profit recovery that we got going on. We've got 4 solid quarters where the vast majority, record-setting numbers of S&P 500 companies are outpacing estimates on the street. We've got a big show of massive profit leverage, and we're just now starting to mix retail sales or top-line sales with that leverage. And I think we're going to be, for the next couple of years, surprised by what corporate profits do. And if you look at a market that's selling a little over 13 times this year's estimate, 11 times next year's estimate, in a record low interest rate environment, I think there's a lot of upside yet in the stock market over the next couple of years.
All right, we got to run. Hey, Jim, thank you. Jim Paulsen, Chief Investment Strategist over at Wells Capital Management.